Welcome to the exciting world of Treasury. In this video, I would like to talk about the increasing importance of the Treasury function, the impact of the incredible advances in technology on the business of Treasury, and how technology can enable managing the complex and dynamic requirements of corporate Treasury in this our 21st century. In the context of the above, what are the essential features required of a good treasury management system, hereinafter referred to as TMS? Although my expertise is in SAP's enterprise resource planning based treasury management systems, my purpose here is to be system agnostic and focus on the functional and business benefits of technology for treasury practitioners and how these can be leveraged in treasury management systems. The treasury function has grown exponentially in importance and is increasingly playing a key role in the financial success of an organization. More often than not, the treasurer of a corporation has a seat at the executive table, and their expertise and input is sought on key corporate decisions that affect the financial future of the corporation. Being responsible for crucial and critical corporate functions, particularly in the areas of cash and liquidity management, financial risk management, custodial functions, and investment and debt management and governance, to name a few. It would be an understatement to say that we live in very challenging times, with disruption being the norm not only in our daily lives, but also in the way we do business and as consumers, the way we shop and buy and consume. These challenges also provide us with great opportunity, being driven by the incredible advances in technology that have been taking place over the past few years and now accelerated by the pandemic. Key questions that corporations and treasurers in particular are facing are how to manage financial risk in a very volatile and uncertain environment, and what hedging strategies to implement against inflation, devaluation of currency, and interest rate volatilities, to name a few examples. New forms of investment like cryptocurrency are challenging the traditional risk-averse go-to assets like gold, bonds, and cash, and decisions need to be made around the composition of investment portfolios, debt issuance, and optimizing working capital, and to fund the internal and external needs of the business. Which brings me to a key question. How can technology help the treasury function to manage these complex and dynamic requirements from a strategic perspective, as well as manage day-to-day operational tasks? First, let's look at the impact of technology on TMSs and how we got to where we are today. The period from 2010 onwards saw some major technological advances. Firstly, rapid improvements in processing power using commodity servers, parallel processing, and now new architectures have taken place, resulting in the ability to process massive amounts of data in real time at a fraction of the previous cost. Secondly, the rise of big data and advanced analytics, huge amounts of structured, semi-structured, and unstructured data now available to companies through social media, external and internal sources that could now be mined to provide real-time, predictive, prescriptive intelligence in the area of consumer behavior, marketing, and now increasingly in finance and treasury. All of an organization's data, both historical and current, can now be held in a single virtual database, allowing all the tools that harness big data to be applied to corporate data. Thirdly, business users now expect consumer-grade characteristics when accessing enterprise data, the same as they experience when they use consumer-based applications they interact with on a daily basis on the internet. The tools to enable this have been improving steadily, where customer-centric user experience is of paramount importance. Next, the advent of cloud-based computing has allowed a cost-effective alternative for organizations with respect to treasury systems deployment. Options that include on-premises traditional licensing to less expensive and lower maintenance private or public subscription-based cloud implementations, or a hybrid of the two. This will allow more medium and small companies to leverage the benefits of integrated enterprise-wide systems, so total cost of ownership decreases and the value proposition increases. Finally, the increasing digitalization of the enterprise through the application of advanced technologies like artificial intelligence, deep learning, robotics, advanced analytics, to software development, automating processing of repetitive tasks, fraud prevention and detection, working capital optimization, to name a few, augurs well for the treasury function.